Greetings to all. Thank you for joining our presentation on the changes facing the future of the auto insurance market. The auto insurance market generally contributes around 40% to the non-life segment globally. It contributes around $600 billion for the mature markets and $250 billion for the emerging markets. For many decades, the bulk of the auto insurance market premiums has always been the personal vehicle market, typically based around the premiums of the personal vehicle and their usage. In addition, other major contributions come from the commercial goods transport market and the commercial passenger transport market segments. The insurers generally make various risk pools irrespective of the driving behavior, maintenance, or the vehicle's conditions. There is a generic risk pool based on either the age of the vehicle or the type of vehicle. Generally, there is no direct correlation between the risk and premium that a user pays. However, with the new technologies emerging, the insurers can predict with very precise models of the risk that each user is taking and can customize the premium. This is possible because of the smart IoT devices, connected cars, car monitoring devices, and driver behavior technologies. The insurers get enormous data that they can feed to their AI solutions for analysis and predict the behavior pattern of a particular driver and the risks involved with a particular vehicle. Channels are also adapting. Generally, the channels utilized today to connect with a customer is via the agent or is broker-based. Occasionally, insurers also use other financial channels like banks and institutions. However, our predictions have changed within the next 7 years. The biggest change coming is in direct response. Insurers will be forced to adopt a more direct response approach because of the need to provide a higher degree of customer care. Over time, this will move to some sort of platform-based branding services. The trend of owning personal vehicles will slowly decline, especially as the next generation changes their ownership behaviors. The auto industry itself is going through a major transformation. Gaining popularity of electric vehicles, experiments around the driverless autonomous cars, introduction of driver assistance devices, etc. is changing the nature of the current auto industry. Along with that, the changing behavior of the users is slowly but surely changing the way traditional auto insurance markets have looked. The utilization rate of each vehicle will need to be maximized, especially given the cost and environmental drivers. Over time, it will get much cheaper and easier to book Uber-like taxi services for personal transport in most countries. These mobility services require not owning a vehicle that sits in the driveway for most of the time, whilst depreciating in value as well, costing maintenance and tax. Based on our various surveys and other available forecast data, including GDP and retail price index studies, etc., it is very likely that in the next 20 years there will be an estimated 30% reduction, gap, between the normally expected index-linked premiums and the expected forecasts in the premiums for auto insurance. The segment most likely to be hit will be the personal passenger vehicle. This gap is due to a number of factors, but mostly is in the improved safety features of the vehicle as well as its autonomous characteristics. This gap is also crucial for the insurers because this is where they are going to make their profits or lose. Thus, the insurers need to take this gap seriously now. The culture of car sharing, ride sharing, carpooling, and subscription-based transport vehicle services will soon become a trend. In turn, the model of traditional insurance will also change. The insurers will be forced to rethink their role in the mobility ecosystem and their relationship to drivers, owners, and vehicles. In future, the insurance premium could be paid by the owner of the car or the passenger or the service provider as the vehicles get smarter and smarter. And the new insurance models will evolve around the concept of as a service. People will be using vehicles more as a service, calling driverless automated cars, maybe even flying from and to your doorstep will be possible. All transactions and notifications will be automated via branded platforms. Mobility as a service, MaaS, is the term that we could hear frequently in the future. But these scenarios are still many years away from now. There will be many disruptions before such a future becomes reality. Thus, let us understand what are the likely scenarios that we could face. Scenario 1. Usage-based insurance, UBI. In usage and behavior-based insurance, the premium charges will be very much proportionate to the risk exposure of the vehicle and passengers. Here, the charges will be associated with various parameters such as pay per mile, pay how you drive, manage how you drive, etc. The charges of the premiums will be defined on the basis of behavior patterns of the driver of the vehicle. For example, when you drive, is it peak time, which areas you drive in, risk exposure, how you drive, sudden braking, high acceleration, etc. And all these data will be monitored and feed in real time to the insurers, and on basis of such data, every individual will have customized premium to pay for the same journey. So, customized pricing may become a reality soon. This can be already observed in various other industries like media, and retail, and now this customization will come to the insurance industry. This scenario is what we term as user-based insurance, UBI. Now, let us look at another scenario, which we call the platform economy. In the platform economy scenario, we are saying the current agent and broker-based distribution channels are going to get phased out and will get replaced by what we commonly call the platforms. Which is just a new way of saying that the market model is going to become common, which will have partners, known as ecosystem partners, that can provide easy, user-friendly experience to the end users. So what exactly are we talking about here? Well, look at Amazon, Alibaba, and Uber. Various players are offering various services to various users at one place, that is easily usable, easily chargeable, and easily deliverable. That's what the next generation is going to demand from insurers too, and that's what insurers will have to deliver. So, let us look at what types of platform could be available for the insurers in the near future. Thus far we have been able to identify the early platforms, and these platforms are going to be based on two different sets. The first big set is automotive industry players. They want to be part of the insurance segment and actually want some of the insurers' business. They want to be the insurance providers of the future. Insurers can either defend or partner with them. What the automotive players are doing is they are making the car smarter and turning it into a platform with different services. They are making the dashboard a centerpiece for customer care. The dashboard is the new control point, and using this dashboard as a catalog for solutions and services, they can provide numerous services including different types of insurance. These services are useful to the insurance provider as well. By pulling and using systems such as GPS, IoT, other smart sensors, cameras etc. all on one platform will add up to significant customized and accurate data for the provider to apply AI to better understand the risks they carry. So, the insurers can partner with these automotive industry players and be part of their platform and ecosystem, use the data collected, and charge a small amount for each of the journeys. This will still add up to a huge market. The other choice for the insurers is to create their own platform and become a platform provider to these automotive players and all the other ecosystem players. The automotive industry players can then rebrand, repackage and show to the customers as they are providing insurance to them, and the insurer becomes the backbone of that complete ecosystem. The insurers can choose whether they want to become an ecosystem partner or to become a platform provider or to act as both. In the platform space, we also anticipate over time the gradual maturing and significant leveraging of the market by new vendors developing software and platforms for smart autonomous vehicles with significant know-how of telematics, GPS, AI and other expert solutions. These vehicle manufacturers are currently led by new generation technology players like Waymo and Uber, but also like Hyundai Flying Vehicle and Tesla. What these manufacturers will be offering is going to be much more than just a vehicle. They will be providing a full-fledged service through their vehicles. For example, just imagine a vehicle as a smart device that can provide entertainment and other services, and the charge for automotive vehicles is just a small part of a much bigger catalog of services. Now we would not only ask insurers but will actually urge the insurers, do not miss this market. Start partnering with these technology service providers now. If you start partnering with them, you will have the opportunity to be part of, understand the API nature and grab a slice of the future market when mobility services become a central proposition. Finally, the third scenario, which is mobility as a services, MaaS, which is far from now, and we still do not know how these services will be provided, but what we do know is, this service will most probably be provided by well-known brands. The brands will become much more important, for example Uber, Alibaba, Amazon etc., where an insurer will be behind the scenes but the actual service and payment modes etc. will be provided by the brands. We all are aware of how big Alipay has become in the Chinese market and its impact on banks and other institutes in China. Today many banks are sitting behind the scenes and taking cuts from Alipay, and most of the end users don't even know which bank or financial institutes are actually helping Alipay to run the show. Similarly, in future the insurers will play such roles and be the backbone system of the brands that are providing the complete package services to the end users. So far, we have understood the current position of the market, the future positions that may be likely, the disruptive phases that are very likely to occur in various technologies that will make an impact. We discuss how the insurers should be thinking and getting ready for the future. To become agile and start transforming for the future. The first and most important step is to become very customer-centric, putting customers at the heart of everything. Second is the channels or distribution, the kind of platform player the insurer wants to become. What kind of ecosystem are they going to serve? Third thing is to develop the insurer's own expertise around usage-based services so that insurers can calculate risk on each client and scale. They also need to see how they can integrate these products. Basically, the API economy, which is where we are heading. So, get ready for the future and start preparing for it. Once again, I would like to thank you for attending our today's presentation on Future of Auto Insurance Market, and if you need any additional information on vendors, technology suppliers, markets or have any queries, please feel free to get in touch with us and we are always ready to help you.